Welcome back. President Trump renewing his push to end quarterly earnings reports for public companies. The president said that they should be providing financial updates just twice a year instead of 4 times to save money and focus on running their businesses. Critics say fewer reports could lead investors in the dark and reduce market accountability if implemented. U.S. reporting would be more in line with how the UK and Europe does things, where 6-month reporting of earnings is common. Joining me now in a Fox Business exclusive is the chairman of the Securities and Exchange Commission, Paul Atkins. Mr. Chairman, great to see you. Thank you so much for joining me.
Thank you, Maria. It's great to see you, too. Thanks for having me.
Before I get your take on this, I want to play this sound from President Trump when he joined me earlier this year as he was talking about short-term versus long-term thinking. Watch this. You said, look, we're going to have a disruption, but we're okay with that. Is that what you meant? The stock market going down was the disruption? What other disruption were you alluding to?
Look, what I have to do is build a strong country. You can't really watch the stock market. If you look at China, they have a 100-year perspective. We have a quarter. We go by quarters.
That's true.
And you can't go by that. You have to do what's right. What we're doing is we're building a tremendous foundation for the future.
So, Mr. Chairman, is this part of that foundation? Do you agree that public companies should report every 6 months instead of every quarter, 3 months?
Well, we'll see, Maria. This is part of a long-running debate, and the president, I think, has made a timely call for us to look at this. And so, as you pointed out, that foreign companies in the United States who are listed here have a semi-annual reporting requirement, and we've only had quarterly requirements since 1970. Before that, it was semi-annual, and even before that, it was annual. So what we should have, I think, is go out and get comment on this as part of a larger look at regulatory reporting requirements that have built up over the years, and to see in this in the current age whether or not these rules make sense. We want, the people have been discussing, short-termism in the marketplace, and even if you look at the 10Qs and how the market reacts to them, it's really what people are interested in, what analysts are interested in, is the quarterly earning calls or the earning calls from the CEO and CFO. And so whether those are quarterly, semi-annual, I think it depends on the market for the particular company, what industry, what the investor demand is. The investor is actually, king here. And so I think companies, even when the UK went semi-annual in 2014, a lot of larger UK companies continue to report on a quarterly basis. So I think optionality and catering to what the investor wants, I think, is really paramount.
So can you envision a time that it would be up to the company and maybe they would do quarterly calls with their CEO and CFO to give an assessment of business, but not actually report the actual numbers until a 6-month period? Would you envision something like that?
Could be. I mean, again, I think, we'll go out and receive, solicit comment and receive comments on this. Lots of not-for-profits and other sorts of groups have been looking at this over the years, economists, and so there's a debate going on about, how do we get back to more long-term thinking? If you talk to people who run private companies who negotiate with public companies to buy, different businesses from them, I've heard over and over where, it's really good to be negotiating right up to a quarter end, because sometimes you can get a really good deal because the company's interested in making its bogey or whatever during that quarter. So investors are interested in those sorts of things. So, perhaps by going to a semi-annual type of cadence for some companies, that would make a lot of sense for all companies, but to have a floor that is suitable. And so the president, I think, is this is, like I said, a timely call for us to look at this sort of thing.
Yeah, I mean, certainly, when you're talking about quarterly numbers, it creates lots of knee-jerk reactions in the stock market. We see huge moves in the stocks. Over the years, we've seen the creation of the quote-unquote whisper number, right? So I wonder if, doing it on a 6-month basis or a 3-month basis actually creates even more speculation about what's going on, or if it, in fact, creates the long-term thinking that you are suggesting. So we'll keep watching that. It's important. So thanks for weighing in on that. I also want to ask you, Mr. Chairman, about the Securities and Exchange Commission and the Commodities Futures Trading Commission working closely, even on crypto. Joint roundtable coming up next week. I first raised this idea to you a long time ago when you first joined us, when you first started your term, about consolidation potential of these two agencies. Back in July, there were reports suggesting that the White House was considering you lead the CFTC. Will you be combining these two agencies? And what's your response to that?
No, I have my hands full right now, and we're working hand in glove right now with the CFTC. So harmonization is what I really envision. People have been discussing these issues for a long time, and I think we're at a point now, especially when we look at the changes in the digital asset area, that it's really incumbent on the two agencies to work hand in glove. Just on Monday, we're going to be doing a roundtable, a joint roundtable with the CFTC. We've been looking at other joint issues with respect to the crypto area. So I look forward to continuing to do that with our colleagues over the CFTC. And what we have to really focus on is, over the years, there's been not so much at the commission level, but down, even in the staff level, there's jockeying for position, and we just don't need regulatory turf battles. I say that the field is littered with bodies of would-be products such as portfolio margining and single stock futures and whatnot that over the years have been torpedoed by the lack of certainty as between what falls within the SEC's realm and what's at the CFTC's realm. So the two of us need to work together. We need to give certainty to the marketplace. It's the American investor and the American economy that will benefit from a joint effort by the two agencies to work hand in glove. And I look forward to continuing that. Particularly
when it comes to the complexity of crypto market structure. And I want to get your take on that, Mr. Chairman, because the Senate Banking Committee has indicated that the committee is going to delay a vote on market structure legislation until the week of October 20th to give Democrats more time to negotiate. Of course, it looks like the Republicans will need the Democrat support to get this over the finish line. What is your expectation for the crypto market structure? What do you want to see play out once that does pass the finish line?
Well, I'm looking forward to Congress acting on this. I think it's important that we have a market structure bill, and we are actually helping. We were helping with the House, and now we're helping with the Senate as far as technical assistance on questions of securities law and that sort of thing, and gaps that we see that need to be filled. So we're going to continue doing that and provide all sorts of assistance. We're also part of the President's Working Group on Financial Markets that came out with a report here about a month or so ago, and so we're really stand behind that report, and so we want to see this get over the finish line, because the Genius Act, which was enacted by Congress and the President back about a month ago or so, I think was a huge step forward that applied to stable coins, and that's the first time that the United States government and the United States in statutory form, has recognized a digital asset like stablecoins. So I think that was great, and now we need to focus on the market structure aspect so that there is certainty in the marketplace and direction to the SEC and the CFTC to work together. I anticipate joint rulemaking, and so that way we can try to future-proof this sort of these rules and the relationships from some rogue regulator or something in the future.
There was
our goal.
Wide support for that Genius Act, absolutely. The SEC approving the nation's first multi-crypto ETF as well, letting investors access a basket of cryptocurrencies beyond Bitcoin and Ethereum. Mr. Chairman, how is that fitting into your broader effort to create clearer rules for digital assets?
Well, that's another example of how we can move forward. We can allow generic listing standards, is what that big step was, where there's more certainty. It's not just an ad hoc type of approach, but we're trying to give the marketplace some kind of stable platform upon which they can introduce new products. So that's a great example. We're going to be working on that. We'll be doing rulemaking in the coming months. We're looking for an innovation exemption to try to get that in place by year end. So there's a lot going on, and I'm really very excited about this opportunity to make this industry in America stand on firm ground so that America can lead with innovation as the president's called for.
Yeah, I mean, look, there's so many fresh ideas here, including, by the way, Mr. Chairman, new policy moves expanding retail investor access to private companies, including potential 401k investments in private funds or on Bitcoin as well. The SEC's Investor Advisory Committee urging tougher safeguards for everyday investors, wanting stronger disclosures on valuations, risks, and liquidity, saying access should be based on investor sophistication, not just wealth. Talk to us a bit more about that, Mr. Chairman, because you want to open up access to private companies for ordinary investors and 401k holders, but you also need to walk this balance of ensuring that you've got boundaries in place so that those private investments are actually safe for retail. So how do you think about this?
Well, you're exactly right, Maria. So we'll be working with the Secretary of Labor and her colleagues over at the Department of Labor to address these issues. And it's so important because, why should private investments in private firms be limited to only the wealthiest and to the big pension funds and things like that? Average people need to be diversified, and if you look at the current stock market today, we have we have only half the number of public companies as we had 30 years ago, and it's if you look at the S&P 500, it's rather top heavy with respect to the Magnificent Seven, and which industry are they in? IT, basically technology, and we saw what has happened in the past. If the market gets too concentrated. So individual investors need to be diversified, and the private markets have developed so much because there's a lot of capital available in the private markets. And frankly, it's uncool to be a public company, or has become so. And I want to make IPOs great again. If you look again, 30 or so years ago when I was a young lawyer starting out in New York, companies like Apple and Microsoft, they had to go public to get capital to build their companies and new products. And today it's opposite. Companies can stay private longer, and there have been so many issues in the public markets between litigation and short-termism, what we were talking about before, the weight of the regulatory apparatus on reporting and that sort of thing, compliance, and then finally weaponization of corporate governance. So those issues have made it really have decreased the attractiveness of being a public company. So we aim to make that better again.
Yeah, and that's all. I'll be interested in hearing what Mickey Bowman has to say Thursday when she speaks about regulation and supervision, all part of the same conversation. Real quick before you go, Mr. Chairman, when you say access to private companies, are you referring to like all private companies, or would it be crypto or tech or even farmland? I mean, is it a whole host of different ideas that are just private companies?
Well, the key word here is diversification, and so we have to put in guardrails, for retail investors to have exposure to these sorts of investments, because they can be illiquid, the valuations can be off. There are a whole host of things. Where the retail investor fits in the capital stack of a company, and then finally, what the liquidity is of that investment.
Great point.
We have to put guardrails around, have most favored nation status for those sorts of investments. They should be bound by their advisors. Obviously, we'll have fiduciary duty and that sort of thing. So we'll put the protections in to make sure that we guard against bad outcomes to the extent that we can.
I'm glad you mentioned liquidity, so it allows people to get in and also get out when they want. Mr. Chairman, it's always a great conversation with you. We so appreciate your time, sir. Thank you.
It's great. Thank you, Maria. Good to see you.
Paul Atkins joining us. We'll be right back. Stay with us.